Fasken Marcus entrepreneur in residence. He's a lawyer, serial entrepreneur, best-selling author, and public speaker. He works with fast-growth entrepreneurial companies, assisting them with strategy and finance. As a serial entrepreneur, Jeff has been involved in startups, acquisitions, and financings for a variety of businesses. He co-founded the Toronto chapter of Young Entrepreneurs Organization. He co-authored his book, Lessons from the Edge, a best-selling book, in which entrepreneurs share their worst mistakes in business and lessons that they learn. Jeff has become a sought-after public speaker by entrepreneurial groups. His most exotic audience was the EO chapter in Kathmandu, Nepal. Jeff earned his undergraduate degree in economics at Brown University and his law degree at the University of Western Ontario. He is a graduate of both Birthing of Giants Executive Education Program at MIT and Directors Education Program at the Institute of Corporate Directors of the Rothman School of Business at the University of Toronto, and he was awarded his ICE certification. Please help me welcome Jeff.
Thank you, Lalit. And thank you, Sonny. It's my game to lose now. Everybody needs a lawyer. Everybody should talk to their lawyer before they do anything. This was the best advertisement for an entrepreneur in residence at a law firm that one could ask for, so thank you. So my presentation today really deals with the pitch. Sonny hit all the high points, a lot of that detail stuff that goes behind, that goes behind the pitch. But, what's that slide deck look like that you go in with, that 5, 10, 15, 20 minutes that you get with an investor, where you want to get your story out, you want to hit the high points that, at least at a 30,000 foot level that Sonny referred to, but then also have in your back pocket likely supplementary slides to answer those questions that Sonny might ask you. And so, having heard what he had to say, you can anticipate not only the slides that I'm going to suggest, but also those background slides that really provide that granular information, so that when he does ask that question, you don't have the deer in the headlights look. You can flip to that supplementary slide 7 that has your detailed financial projections, or your use of proceeds, or your IP inventory, or whatever. So I agree wholeheartedly that you've got to know your business, you've got to know your facts, and you've got to be able to answer these questions in a forthright and knowledgeable way. So my presentation really is about how to stand out in the crowd. Sorry. Startups, entrepreneurship feels a little bit like the flavor of the month. If you don't have a startup these days, everybody's got a startup. So how do you distinguish yourself? How do you succeed? How do you get funding? How do you stand out from the crowd? And my suggestion is that you tell a story. That you tell a story about the pain, that problem that you're trying to solve, and that your solution is the must-have solution to solve that pain that's in the marketplace. As Sonny said, you don't want it to be just incremental. You want to have that wow, that big disruptive change to solve this big pain. So what I'm going to do now is really just quickly take you through the 10 slides that I think you should have in your deck. Keep it simple. The most important thing I think I want to say is, as you heard already, people invest in people. And so you want your audience to be looking at you, not looking there. That's really just to support what you're saying, so if they want to take notes and they missed one of the words that you said, they can quickly refer there, make a note, or get a copy of it, or whatever. But you want them to be looking at you and listening to you. They're investing in you. People invest in people. So the first slide is that cover slide. It tells your name, where you're based, the presenter's name and their title, and that short description of what your business is. In my case, I'm the trusted advisor to the CEOs of fast growth companies. I've got that sort of elevator cut line. If anybody tonight at a cocktail party wants to know what I do for a living, well, I'm the trusted advisor for the CEOs of fast growth companies. I mean, I say this in my sleep. What's yours? The next slide really is that overview. When I do speeches, when I do presentations, I like to tell you what I'm going to tell you. I like to tell it to you, and then I like to summarize and remind you what I told you. People have short attention spans. I often say that when I do my public speaking, I speak to about a grade 9 level. Now that's not to say that the audience isn't intelligent, but you can't assume the same knowledge that you have. So it could be the gifted grade 9 class, but keep it simple, dumb it down, because you are living and breathing, and this is your every waking hour is this business. You have so much assumed knowledge, and you just can't assume that everyone else in the room shares that. So tell them what you're going to tell them. Describe this core value proposition, the so-called solution to the pain, who's your target market, and where you are today. Now we're going into what that pain is, and describe it. For Mark Zuckerberg, the pain was he couldn't get a date. And he wanted to create a software solution that created a social network so he could get laid. Okay? I mean, it was as simple as that. That was the pain. He couldn't find a girl. Okay? So what's your pain that you're trying to solve? And how big and how important is that problem? What's the size of the problem? And who are the customers? Who are you solving this problem for? Your next slide, you want to talk about what's that solution. So what is your offering? What's your product? What do you do? How are you going to solve that pain? How do you fit into the value chain? Are you selling to consumers? Are you selling to businesses? Are you a distributor? Where do you fit? Do you complement existing solutions or do you replace them? Again, Sonny wants you to replace them, not incremental. He wants that big wow. Who's the customer? How are you going to get to them? And is it must-have or nice-to-have? I like to say that if you have identified a big pain and you have a must-have solution, and you got the team, and you've got a revenue model, that's what's fundable. So is it must-have or is it just kind of nice to have? And list those key benefits and who are the people benefiting, who are the beneficiaries, who's going to be getting the benefit of this solution. So what's unique about you? We heard about intellectual property, so is it proprietary? How do you protect it? Do you have patents? Is it trademark? Is it trade secrets or copyright? What other competitive advantages do you have? And summarize your product so it's clear that you hit those high points. Now you want to talk about who's the competition. I would probably think that Sonny would agree that if you come in and say, I have no competition, and we've all heard it so many times, nonsense. If you have no competition, then you have no market, right? If there's a market, then there's going to be people trying to make money in that market. So you have competition. And if you can't figure out who they are, that's probably fatal. So they may not have the same solution you have, but somehow they're addressing this pain, this problem. So who are they? What are they doing? And I suggest, in order to keep it simple, use a simple matrix like this. So, my presentation, I identified the pain, I gave a clear description of the solution, I have a must-have solution, I'm very articulate, I'm making eye contact with the audience, and I have understandable slides. My competitors, none of those things. Buy me, invest in me. Very simple, it's very clear, nobody has to guess. You can drill down later in the supplementary slides, but it's very clear who your competition is and how you beat them in all these factors. How are you going to get to the market? Do you have customers yet? Do you have traction? What do you charge them? Is it SaaS? Is it a license arrangement? Is it a one-time thing? Is it a freemium model? How are you going to make money? If you don't have customers, who are the target customers and what validation, what evidence do you have? Do you have pilot customers? Do you have strategic partners who are going to beta test this thing? Who are these people? And what's your business model? How are you going to make money? Is it a license? Is it a sale? Is it a service business? Is it a royalty business? How are you going to make money? Explain your pricing, explain your costs, and your profitability. What's your gross margin? And be prepared to defend these assumptions. And that's where that supplementary slide will come in. And you'll be asked to show what are those assumptions? How many people are you going to sell? What's the average price? What's the cost of acquisition of your customer? All those details that you need to understand in order to establish credibility with that investor. And then be prepared to do sensitivity analysis. You probably should have them in your deck. Here's my best case scenario. Here's my worst case scenario. Here's a middle case. In the worst case scenario, you run out of runway. How much capital on a cash flow basis are you going to need to get to the finish line, to get to that next milestone? Your projections. We already heard about the hockey stick. Most people like to see 5-year projections. I would keep the numbers simple. Use a simple hockey stick chart. You can have the background in your deck. People want to see year, they want to see the number, how much money, and they want to see it in terms of revenue, gross margin, and profitability. And they want to see that hockey stick. Sonny's slide used the word reasonable and conservative. I shudder when I hear the word conservative. Everybody's got conservative numbers. It's an oversaid, overused phrase. Be reasonable. Be prepared to defend them. If you got to sell to 1,000 people this year in order to hit your numbers, how are you going to get in front of them? Is it going to be online, Google-based advertising, or is it going to be hand-to-hand combat where you got to go sell to individual people until you get that momentum? Is that feasible? How many salespeople do you need? Is it in the budget? Be really granular, be really practical. Understand your business. And again, be prepared to defend these assumptions. We've already heard it, it's all about the team. So who are they? What do they do? What's their track record? What board members, advisors, mentors do you have? Is it a director? Is it a board of directors? Or is it an advisory board? I often see these slides with really fancy names, but that's all they really are fancy names. Guys like Sonny are going to pick up the phone and call them, or somebody who they know 1 or 2 degrees of separation. We want to see mentors and advisors who are rolling up their sleeves and are actually helping you, not that they kind of just agreed to lend their name to your business. That's where you're going to get your credibility. People are investing in the people. They're investing in the team. And of course, it's very important to have the right lawyers. So what are you going to do with this money? How are you going to use it? And talk about those milestones. Sonny and I never talked about our presentations today, and it's just actually quite interesting that I was listening to them, how these two really match up. I guess we've been through enough of these things to know. But your numbers, what are you going to do with this money? How are you going to spend it? I do another presentation on my book, and one of the chapters was about money, and what the main lesson was: raise more than you need and spend less than you have. Your projections are going to be wrong, so be conservative yourself. Build in contingency, build in expectation that things are not going to go right, and build in, don't go out and take that money and buy all the toys and the fancy games and Aeron chairs and leases on cars and fancy office space. Keep it simple, treat that money like it's your own, because there are external forces out there that are beyond your control, and you may not be able to raise that next round because of things that have been beyond your control. And you want to have some powder dry for that rainy day when you got to make payroll and planes fly into buildings, or derivatives go down or whatever. And we've seen it. I mean, in my business career in 30 years, there's been more crises and more problems. I mean, something happens in the Middle East and investors get nervous. So just make sure that you have some powder, dry powder. And at the end, summarize, tell them what you told them. And restate your tagline. I'm the trusted advisor to the CEOs of fast growth companies. I'm Jeff Dennis, thank you very much, and that's your pitch. So like I said, keep it simple. They can be the gifted class, but talk to grade 8s or grade 9s. Don't use lingo and industry jargon. You know, don't assume they know everything you know. These guys often are generalists. I mean, Sonny sees a lot of life science things, but it's a huge, huge field. You know, he may understand oncology, but he may not understand respirology, or I'm not speaking for you, but, you know, don't assume he knows everything. Keep it simple. Use stories. People can relate to stories. You know, to describe, I saw a great presentation, if you ever have a chance, the winner of the TiESep last year on haggle. They started off by talking about a woman who went out and bought a car, and what a bad experience it was, and how she had to get her father involved because, you know, the salesman was giving her a hard time, and you know, all the games they play. And the point was, people hate buying cars that way. And on haggle, this business, they've turned it on its head, and they have a solution. And I won't go into all of that, but the point is, it was really, really evident. Everybody in the audience was that woman at some point in their lives. Felt that pain, understood it loud and clear, and by telling it as a story, it was very powerful. Drop names. I mean, if you have strategic partners, if you have customers, if you have investors, if you have supporters, you know, don't be shy about it, but don't make it up, okay? Be truthful. You know, if they are your advisors, they better be your advisors. But don't be afraid to take advantage of the contacts, the network, and the relationships that you have. How am I doing on time? I'm kidding. Stay on time. You know, be respectful of the investors' time. They are seeing lots of these deals. You know, understand them. Try to put yourself in their shoes and really be respectful. Be honest. Don't overstate things. You want to come across as being really credible and trustworthy and having high integrity. They're going to be your partners, you've heard. So build on that. Again, conservative is not my favorite word. Be realistic. Be reasonable. Use big fonts. Okay? There's the so-called 10, 20, 30 rule. 10 slides, 20 minutes, 30 font. Most of the investors have gray hair, Sonny. Most of the investors wear reading glasses. Most of the investors won't be able to read those tiny little projections that you put in your slides. Make it legible. I was at an event last week, there were some great presentations, but the slides and people, the presenter was like this, trying to read his own numbers to report. It was ridiculous. And I see that all the time. You know, it doesn't do you any good if no one can read it. And again, don't rely on the slides. Have them fall in love with you. Look them in the eye, put a big smile on, talk slowly, breathe. People will invest in you. And that basically is, if you follow this advice, all that money will be yours. And that's me. Thank you.
Any questions?
Questions? Yes, at the back.
I've seen a lot of fancy slides, so is there any type of package that you suggest or whatever we use to make the slides?
No, I mean, you know, there's, what's this new thing that, where the slides are Prezi. You know, the worst thing that you can do is have it not work. I don't like relying on the internet. You can go to meetings and they don't have a connection, or your computer doesn't work, or something like that. So don't rely on technology. Keep it simple. I mean, you know, use attractive graphics, make it legible. You can have interesting fonts, but I wouldn't worry about, they're not investing in the slide, they're investing in you. So if it looks too rough, you know, there's spelling mistakes and poor grammar and things like that, it says something about you. But, I mean, you don't have to spend money on graphic designers, and I wouldn't use a lot of animation because often it doesn't work when you need it most. Videos are another risky thing. You know, don't rely, if you use a video, make sure you've got it on your hard drive and you can, you know, show it and rehearse it before, you know, in the waiting room or, you know, before you do your presentation. Like, don't rely, when I gave Lalit my presentation, but I also brought my little USB. It has nothing to do with Lalit. I do it every single time. I always bring my presentation just in case, always. So, you know, be a Boy Scout or a Girl Scout, be prepared. Any other questions?
Actually, I have one. There's always a great deal of discussion about how many investors you show it to, friends and family kind of thing, and the way that you ask for funding. We were told that we shouldn't show financial projections because that might be construed a warranty or something like that. Do you have any advice about that?
Well, I think you need some kind of disclaimer, you know, in your material. And usually most of these presentations have some disclaimer. I think, you know, everybody understands that these are projections. It says projections. Everybody understands that you're a startup. So I wouldn't be too worried about that, but usually there's some sort of disclaimer in the material that, you know, these are projections, these are, you know, based on assumptions. If these assumptions don't come through, then the numbers could be different. You know, you're going to get down to negotiating. No one's going to write you a check on the basis of that document. They're going to negotiate a term sheet, then there's going to be a subscription agreement, then there's going to be a shareholders agreement. And by the time you're finished with all of that, you know, there'll be some provision somewhere that says this is the entire agreement and nothing else really applies other than this agreement. And so everything else, you know, was really just part of their due diligence.
Just to add to that as well, that's usually more important for public companies that are on an exchange, because you have to have full disclosure. And then they usually have a safe harbor statement at the beginning of the presentation that allows the investor to know that this is just based on projections. When you're dealing in private equity, it's not as tough. So even if you make the investment, usually in order to invest as a private equity investor, you have to be an accredited investor. Yeah. And in that case, because you're accredited, you have you're okay to lose the money that you invest in. So a layperson or someone who's not able to invest through accredited status wouldn't have a problem with that. You could lose that money and still be okay. It's for when you have the common person that would invest in these types of things who depend on those projections and believe them to be real. That's where it's trouble. But those type of people wouldn't invest in private equity anyways. They would invest in the public market.
Is there a place to go to get a safe harbor statement, or is it just your lawyer?
Can you talk to your lawyer?
Okay, all right.
Yes.
I was going to suggest just take someone else's, change the name.
Yeah, be careful. And I know, you know, it's self-serving, and I work in a law firm, and we're in another law firm, one of our competitors. But, you know, one of the things I see a lot of, and Sunny talked about it earlier, is the do-it-yourself stuff. You can download lots of documents on the internet, shareholder agreements, asset and IP transfer agreements. There's tons of stuff out there. The problem is it's garbage in, garbage out, number one. Number two, different jurisdictions have different laws. So if you download an American asset transfer agreement, they have a unified code there, whereas we have different laws. And so it may not be applicable. So, one of the problems that we see, and I just, again, this is a little bit self-serving, but I do have a mic, so I might as well take advantage. We instituted a startup program for a very low price, $2,000, and it's paid over 12 months. We will get these companies organized and talk to them about their IP and how to protect it, and talk to them, get them organized, get them incorporated, filed trademarks, like basic stuff, just to get them in the game. And the reason we did this was we were seeing companies coming out of these accelerators and other places where they're fantastic for product development, but you have this, we heard the word pivot, everybody's pivoting, everybody's, developers are coming and going, they're fighting, they're changing the code, and they have no agreements in place because they're young people typically who don't really have the experience. And at the end of the day, they go and see a guy like Sonny and they own nothing. And they have nothing. Because that developer that they had a fight with 3 months ago took the IP with him because there were no agreements in place. And we just had a situation, like literally closed this week, where the company came to us late, had come out of one of the accelerator programs. It was a dog's breakfast. It cost about $50,000 in legal fees to fix it, as opposed to $2,000 up front and maybe a little more along the way. And they never got funded. They ultimately sold the business. Probably all you in the room would be very happy with the price they got, but it wasn't what they were hoping for. And they really kind of had to give up their dream, and now are going to work for a bigger company. And really the whole thing was because they had no IP, or the IP wasn't fundable by an investor. This guy was in the business, the person they sold to was in the same industry, they understood the risks, they could buy it and take that risk and pay a little bit less. It's a cautionary tale, and Elite and I were talking about it at the beginning of the session. I saw another one last week where a guy came out of was Hacker Health or Health Hacking or whatever the heck it was called. So this is one of these startup weekend programs. He came in with an idea, they built a team, they pitched and did all the things they do on these startup weekends, and at the end of the day, he ends up in a lawsuit with his team over who owns what. And he came to see us because they're fighting over who owns what. And so, intellectual property is created on these weekends. It's created in these accelerators and all these places. It may be created here in your workshops or whatever. And so you need to know what you're doing, and you need to protect yourself, because at the end of the day, if you don't have, we're in a technology space, so there's no bricks and mortar, there's no real estate for most of these companies. All they have is this intellectual property. If they don't own it, no one would close that deal to buy the house if somebody had a mortgage on it and it wasn't going to get removed. Well, that's kind of what this is like. People have claims on this asset. And we all saw the movie Social Network. That's exactly what happened, right? The Winklevoss or whatever they're called, they sued them over stealing IP because they were working on it and had no agreements. Any other questions? All right, that's it, thank you. Sorry. TiESep, okay. So I'm the chair this year of TiESep. TiESep is Canada's largest business competition. It's open to startups and early stage companies. The companies that participate really are from a wide range of industries, from life science to clean tech to ICT, social, lifestyle businesses. It's really a mixed bag. We do get some non-tech businesses, but that's not that often, and usually they don't seem to drift to the top in terms of the winners. We typically see the winners coming out of tech. There's $150,000 of prizes available, both cash and in kind. And, but more importantly, it's really about the mentoring. We have 60 judges and mentors who will review your business plans, work with you on your pitches, give you feedback. And so at the end of the day, even the so-called losers are winners because everybody comes away with a lot of value. And also the judges tend to be members of the financing community. So you're going to have an opportunity to get in front of some of these people, pitch to them, and have them, have an opportunity to give you feedback about your business. Applications are open now. It's open till the end of January. The website is TiESep.org. I think it's free for TiE Institute members.
This year's registered members, it's free.
It's free. It's $100 typically for outsiders, but for the TiE Institute students, it's free. Some of the TiE Institute people have done very well in the past, and so please sign up. We'd love to have you participate. If you have any questions, please ask me or Leet or Carl at the back. Yes?
Just a quick question. So this has been a great, series of talks on social entrepreneurship, but just wondering this year whether there's any separate treatment or whether social purpose businesses are going to be sort of pitted against regular businesses that are looking for an exit strategy.
We're not sure. We just met yesterday on that exact point. So we want to do something to recognize the social entrepreneurs. It's been a challenge for us because historically we've kind of lumped everybody together. So we had, ICT companies competing with life science and so we're just trying to figure out how to make that work because it's the same issue comparing apples and oranges with everybody, although the criteria obviously are different for social enterprise. So it's a good question, and we will do something to recognize it. I think at the end of the day, as I said, the big value is the exposure, just to practice doing your pitch, getting in front of these people, getting the feedback. I mean, it goes on from when we start in the beginning of February till the decision is made in the middle of April. There's 4 separate judging events. I mean, as a judge, it's a pain in the ass because it goes on and on forever. But from a participant's perspective, it's really valuable. So I really encourage you. Thank you.